Good morning and welcome to our 2-minute macro summary by Markets Policy Partners. Each week, we cover the 5 most important factors influencing U.S. financial markets. And this week, we got big news from OPEC that confirms and supports our cautious view of risk assets in U.S. stocks in particular. John, Brendan, let's cover the top 5.
Thanks, Bob. OPEC has really put the Fed over a barrel here with an output cut over the weekend. It's the first time that oil has made it into our top 5, coming in at number 4 this week with the million-plus barrels per day unexpected output curbs announced by Saudi and the other members over the weekend. This is spiking oil prices up and very consequential for our number 1 issue, which is the Fed outlook. We are in a position where the markets have priced in pretty meaningful rate cuts through the back half of this year. And our thesis continues to be that sticky oil prices and other high inflation dynamics or elevated inflation dynamics may keep the Fed on basically at peak rates for an extended period of time, which we think is relatively disappointing to the markets. Inflation remains our number 2 issue. And we got some relatively middling and moderate data last week, but it certainly didn't come anywhere near the Fed's 2% target. Number 3 is growth. Brendan, you want to talk a little bit more about that?
Yes, well, number 4, oil, jumping onto the screen, is definitely not positive for growth. Our former number 1, the stresses in the US and EU banking sector, has definitely dissipated. It's now number 5. So that should be somewhat more positive for growth than we were thinking 2 weeks ago when we thought we were in the middle of a banking crisis. Have a great week trading out there, everyone.